Good morning, folks, and welcome back to Almus Market Mornings. It is going to be an interesting monetary policy decision today by the RBI. Let's break down the two camps because in the markets there is a wide debate on what today's decision would be. The benign inflation and the tariff related hits require a more supportive policy, and that's the argument used by those expecting a cut. The other camp expecting RBI to stay put has the logic that the central bank has already cut rates by 100 basis points, along with a staggered CRR cut of the same quantum. While inflation is benign, there is a pickup expected by next year. Things are uncertain and the policy is still in transmission, and the rupee is at its weakest. Good morning, JK. What are your expectations out of the MPC decision today?
Good morning, Swaraj. So I am on the camp of no change. RBI has already front-loaded the rates by cutting by 100 basis points so far this year, and that is still being transmitted. And more liquidity will be infused in the month of November as well. And not only that, in view of the challenges that Indian economy is facing due to the US policies, government has also taken several fiscal measures to support the economy. I think RBI will take a wait and watch approach. No doubt inflation is on the lower side. It can come down further due to GST effect, but I think they will observe the same. Possibly a cut in the next meeting is what I expect. I'd be more interested to see the inflation forecast, whether it will be reduced from 3.1 forecast last meeting further in view of the cut in GST rates. Growth rate also will be interesting. RBI had projected 6.5% for FY26. In view of the expected hit to our exports, whether they would like to downgrade the growth or not is something that I would like to wait. Possibly there will be no change that as well. Apart from the monetary policy, of course, the rupee is charting its own course. I think, irrespective of the monetary policy, it is on a weakening path. So I don't think there is a change in that because the factors driving it are the trade impasse with the US as well as the FII flow, which continue to be on the negative side. Equities have seen almost 4 billion of outflows for the month of September. So hopefully the new quarter brings in some change in the trend. But until that happens, the rupee will be on the weaker side. The movements are being checked due to RBI intervention. Therefore, any fall in the rupee will be very gradual, but the target remains at 89 and 89.20. Yesterday, we also had a data on external debt from on India. It for the quarter two. So quarter two saw an increase of 11.2 billion, which was less than the increase that was seen in the last quarter. However, it still remains at 18.1% of the overall reserves. Rather, the short-term debt remains at 18.1% of the overall debt, which means that the pressure from short-term debt is lesser, but still 18.1% is will come into play if rupee is under severe pressure and there has to be more outflows on account of debt. So that is what I would be looking at. Just for a perspective, our total external debt is 747 billion. Our net FX reserves, that is headline minus forward sales, is around 650 billion. So that is something that we need to take note of. As I said, rupee is not influenced by these releases. It is on a gradual declining path. On the external side, the major focus has been on the looming US shutdown, which is likely to take effect in a couple of hours from now because there has been no deal between the Republicans and the Democrats. If anything, there has been tougher line taken by both the sides. Now the focus is on how long it is going to be. In the last 50 years, there have been four major shutdowns or funding lapses of which lasted more than 15 days, and that the longest one was 35 days that was seen in 2019. Now if it exceeds, or if it the longer it remains unresolved, the bigger will be the challenge for the US economy, which is already showing some signs of slowing down. I think this is the one area which market will be watching more than the economic data. Economic data, of course, yesterday was somewhat on the dovish side. After strong data that we got last week, the consumer confidence fell more than expected. Housing prices fell for the fifth consecutive months, and the job openings, although they were a slightly higher level, the quits rate actually fell to 1.9%, which is multi-year low. And so the quits rate is very important because that means people are holding on to their jobs, and there is no new jobs that is being created as well. So another important pointer in this data was people thinking jobs are plentiful, less the proportion of people that think jobs are hard to get, has historically been a key leading indicator for the direction of the unemployment rate, and that has been deteriorating quite for quite some months now. So overall data is weaker, and I think it does not influence the Fed decision to be on hold. I think for the Fed, apart from the economy and the inflation, the impact of the shutdown may be another factor that they will be watching as far as the U.S. economy is concerned. Yesterday, we had also a host of data from Germany, and surprisingly, headline inflation in Germany crept up. 2.4% from 2.2%, and even the month on month was higher at 0.2%. But this would have normally led some people to speculate whether ECB will be changing their stance to the hawkish side. However, if you look at the other data, the retail sales and the employment situation in Germany, they are actually been quite weak. Even the wage growth has been weak. Apart from that, the lower wage growth, as well as the fact that with a 15% tariff and higher tariff like 100% on pharma and the aluminum and steel, the Eurozone economy is going to face a much tougher challenge in the coming days. They can be beset with a lot more inventory domestically for domestic sales, and that can actually lead to lower inflation. So yesterday's inflation number coming higher was a blip, and I don't think there will be any change in respect of a monetary policy outlook from the ECB in this regard. Yesterday, we also had another decision from Reserve Bank of Australia, another central bank who was cautious on the outlook and kept their rates on hold. I think they are looking at, while inflation is under control, or rather, it is hitting their target closely. I think they're more on the watch on the economy in view of the global developments as well. Yesterday, we had the gold and silver that corrected sharply. That was mostly due to the half year end factor and the quarter factor. But what we're seeing is that the trend is so strong that today we already made a new high in gold and silver. So that trend continue. As far as the dollar is concerned, it is still meandering in ranges. While the underlying trend is one of weakness, the positioning in the market is actually weighing on the further dollar fall. Therefore, we could see with any risk off scenario emerging, we can see some more short covering in the dollar, particularly in the quarter four. In historically, we have seen that there are sharp reversals, or rather a sharp retracement of the trend that has been existing for the previous months in the year, and that probably can be seen uh, for the dollar as well. So euro can once again go towards 1.15, and possibly the yen can retest 150. However, for the yen, we have to see the monetary policy change that is likely to come about in the month of October, where they are expected to raise the rate by 0.25%. Overall, we are starting a new quarter with a lot of events ahead, and US economy in a very delicate position, and even the monetary policies are definitely taking a pause everywhere except in the US. So I think for the rupee, we'll be watching how this quarter turns out, because currency has already been in a gross underperformer, already 3.5% fall against the dollar in the first 3 quarters of 2025. Thank you, and all the best for the Durgashtami.
Thank you, JK. And just quickly summarizing for today's RBI decision, expecting that there are no change in rates since the policy is definitely in transmission. Liquidity is still being injected. Government has also taken fiscal measures like GST cuts. So maybe not this meeting, maybe next meeting we might see some cut, especially if the inflation surprises. What would be keenly watched is what kind of forecast they come out with for this FY26 inflation number. So already in the previous meeting, it was forecasted at 3.1% by the RBI. Whether this will be lowered is something that needs to be seen, because there is a whole host of projections in the market. A lot of private banks coming out with much lower projections for the inflation. Rupee is on the weakening path. Factors driving it are the FII outflows along with the trade uncertainties. We also had sort of interesting data from Germany where the inflation went up, but the other data like retail sales and employment situation remain weak. So essentially, inflation inching up, growth faltering is a tricky stagflationary situation, but further trends need to be seen. Gold and silver corrected sharply due to the half-year end factor and profit taking. Gold has already made a new all-time high. Such is the strength in the bullish trend. So happy Durgashtami to all. All the best for the new quarter. Thanks for listening. We'll catch up on Friday with the fresh round of updates.